Hi guys, welcome to Gold Today. This video is brought to you by the coach. Remember, always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for Thursday, we'll be waiting for the following economic readers to be released from the United States: the core retail sales month-to-month for July and the retail sales month-to-month for July, Philadelphia Fed manufacturing index for August and the non-farm productivity, Philadelphia Fed employment for August, and the NY manufacturing index for the month of August. That's all for the economic calendar. We'll move on now to have a look at the numbers. On the last trading session of Wednesday, we have had a trading range from 1494 to 1524. Numbers are rounded and the market is still opened. Gold spot is expected to print a close price above 1516. The number is rounded and the market is still opened. Gold is trading in a bull trend above its old daily simple moving averages, and for the 20 days daily simple moving average, it's now about 1459. Gold is positive as long as it's trading above 1427. We are overbought on the weekly and monthly and daily charts, 84, 73, 72 respectively, and the first support is 1511, followed by 1500, and then 1494, and for the resistance levels it's 1518, followed by 1527, and then 1534. That's all. We'll move on now to the trading strategy. At the first place, I would like to clear that I am not really biased either to gold bulls or bears. I just see that gold bulls has a better story to tell. What stands by me that gold has been acting like a winning lottery ticket since 2.5 months. If you did buy it at any price, it made your money back, and the top of them some profits. Sure, everything has an end, but I still see like $100 left in this rally before it falls into any real corrections. And what stands by that the central banks around the globe are into the move to ease their monetary policies, and there are so many geopolitical uncertainties that supports gold prices to move up higher. From the beginning of the this week, I used to end my video with a chart that shows the yield curve, the spread between the 2 years treasury bonds and 10 years treasury bonds, known as the main yield curve. I used to tell you guys keep an eye on the on it. Once it inverts, it will trigger sell-off in the equities, and gold and silver shall appreciate on the back of that. Today's rise was sponsored with the inverted yield curve, signaling a recession that to hit the U.S. economy in 12 months, or according to other analysts who's somehow pessimistic, 5 months only. We talked in our weekend video also about the bonds market yields and prices, and the falling yield and the inverted yield curve. So to refresh, bonds, like any other thing, when it's demanded, the prices goes higher and the yield falls because you bought it at a premium. So we talked about also the negative yields and how quarter of the 15 trillion bonds market is paying a negative yield. Nowadays, it's 90% of this market is paying negative yields, also including the treasury bills of the United States. Technically, gold traded in a tighter range than the trading range of yesterday. We have seen a small dip to 1494, followed by a move to the upside, and then there was so many dips which was recovered during the trading session. To the upside, a move above 1527 will open the door to a test of the year till date highs at 1543, then 1550. To the downside, we get 1518, then 1511, then 1506, and 1500. That's it for today. Thank you guys for watching this video. I will see you tomorrow in another video.
Fly me to the moon, let me play among the stars. Let me see what spring is like on Jupiter and Mars. In other words, hold my hand. In other words, baby, kiss me. Fill my heart with song, let me sing forevermore. You are all I long for, all I worship and adore. In other words, please be true. In other words,